Let's get more from Colin Ciesynski, Chief Market Strategist at SIA Wealth Management. Colin, we know all about the tariffs. What else, though, should investors have on their radar this week?
The big thing that I'm really watching for this week now is the job numbers. February was the first full month of President Trump and the new Trump administration being back in power. There's been significant cuts to government spending, which also means there's been cuts to the government payroll as well. And we're going to see on Friday how did that play out. And so tomorrow we have ADP payrolls, which is the private sector, and then on Friday we get non-farm payrolls, which is private and government. So we'll get a better sense of, well, what is happening there. Has the private sector been able to sop up the job losses on the government side? And then of course also on Friday we'll get Canada employment, and that'll be important too, because it'll be a question of how is this all of this playing out in on this side of the border as well.
On the Canadian dollar, give us your thoughts there, because we know that if there's swinging tariffs tomorrow aimed or that include Canada, it's likely to put pressure on our currency in the short term.
It certainly could, and it's something that we saw particularly late last year, was as Trump got elected and the tariff rhetoric against Canada started to ramp up, we saw a significant decline in the dollar. And important for us to remember, in the States, you'll often see the impact of economic shocks or economic news in the stock market. In Canada, it tends to play out through the dollar more. And so it's a great question to ask, because what we've seen is we have seen the dollar come down quite significantly. Since the beginning of this year, the dollar's actually been pretty much steady against the US dollar. The Canadian and US dollars are pretty much even. We went down, then we came back a little bit. And so now the question is, where do we go from here? And then also it's something we may see in the markets as well is if the tariffs end up being worse than expected, then or just rhetoric and the trade war ramps up, then I mean, we could see potentially more pressure on the Canadian dollar. We've also seen at times where if things aren't as bad as people had feared, then the dollar could bounce back. So it's a big moment for the dollar in terms of setting the trend of where do we go from here.
You were on Market Call not long ago. Just one idea I wanted you to remind us about, or you're thinking, T-Mobile US. What attracts you there?
Absolutely. So one of the things we've seen in the market over the last number of weeks is a defensive shift from confidence, from risk taking to people being conservative and risk averse, and we've seen this play out in a number of parts of the market. We talked about the big decline in the Nasdaq. People are backing away from growth. They're backing away from momentum, and then we ask, well, where's the money going? Well, some of the money has gone into gold because that's been hitting new all-time highs, while Bitcoin, as an example, has been coming back down. And on the other hand, we've seen capital coming out of small caps in the States, and where has it been rotating into? The traditional defensive sectors. In the States, one of those is telecom. And so at SIA, we do analysis of head-to-head battles of relative strength between stocks against other stocks in their universe. So for example, in the S&P 100, that's 10,000 battles and who's winning. And right now, the company that's winning #1 ranked is T-Mobile US. And honestly, AT&T is #3. Traditional telecom is doing well. Utilities are doing well. Healthcare is doing well. The more traditional defensive sectors are the ones that have been performing much stronger on a relative basis than the growth momentum sectors, which have been getting hit pretty hard.
What about in Canada, the staple stocks? Loblaw hitting a new record high this week. L is the symbol. Metro at its highest in at least a year. Empire, parent of Sobeys. Are they attractive right now? Do you think a lot of money will still go on being parked in those staples names?
I believe so, and it's important. In Canada, one of the things we're seeing is, yes, these more domestically focused, mature companies that are attracting. So we're seeing it in the grocers. We've been seeing it in the utilities. We've been seeing it in the pipelines, and those kind of more traditional areas are doing well. And the other area that's been doing well is mining companies, because we've seen the prices of gold and copper have done extremely well lately. We've got gold at new all-time highs even today, and in our Canadian universe, the top-ranked stock is Agnico Eagle as a gold producer, and it's a stock that we hold. Both Agnico Eagle and T-Mobile are stocks that are held in our portfolios. They're the number one ranked stocks in their universes.
And what about Chinese stocks? Are you seeing value there?
Something really interesting is we don't just look when we do our comparisons, we also do macro level comparisons between asset classes. And one of the areas that's been doing quite well of late is international equities. We've had this year so far, international equities have been very strong. Canada's been in the middle, and the U.S. has been underperforming. And so it's quite interesting. We've seen strength in Europe, but another area we've seen a lot of strength is in China. And as an example, we look at the BMO China equity ETF fund. It's ZCH, and it actually looks like it has broken out of a long-term base. It's been China equities, China ETFs have been doing extremely well. And interestingly enough, after years of being quite depressed, sentiment towards China looks like it's turning the corner.
And finally, you touched on mining, because it is interesting with copper, it distorted lately by a move to get metal into America before the tariffs kick in. But give us your view on copper broadly. I know it is a little inflated right now, the US price, but for the next year or so, do you think copper miners are a decent bet?
The price of copper itself looks like it's coming around, and copper is most interesting, and why I keep an eye on it is because it's the metal most sensitive to the world economy. They call it Dr. Copper with the PhD in economics, because when you look at copper, you kind of get an idea of what is the global demand for resources. You also get that to a lesser extent from crude oil as well. What is the demand for energy? What is the demand for materials? And copper is particularly sensitive as well to China's economy, and it has been for many years. And so what's interesting here is that actually, in addition to the squeeze we've had in metals related to repatriation to the US, the other thing we're seeing with copper is that the copper price is taking off at the same time Chinese equities are taking off, which is really interesting because it's suggesting that that investors are expecting improvement in China's economy.
Colin, we'd better jump. Thank you very much indeed for joining us.
Thank you. Have a great day.
Colin Ciesynski, Chief Market Strategist.